Bitcoin's short-term price action is not looking healthy. It's likely we're going to see the price go below 35,000, which is probably going to panic the markets. So just strap yourself in because it might not be comfortable short term, but then we need to zoom out and look at the macro of what's likely to occur. And that's what we're going to cover in today's content based on Elliott Wave, Fibonacci, technical analysis. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So it is unfolding as anticipated with what we've seen in the last few weeks. So let me just zoom out first. Zoom out. Let's just zoom out, zoom out, zoom out. Very, very important that we kind of have a macro picture in play first, right? So we have seen this, 2017 wave 1, wave 2, wave 3, what looks like a wave 4 being formed, which is not complete. But if a wave 4 does hold and everything is valid so far, this is what we're anticipating at some point this year, right? Some point this year towards that six-figure Bitcoin is the thesis, is the high probability outcome. However, short term, that does not mean that we should expect optimism in the market, because we've had this bearish movement to the downside. It looked like a trend reversal, but it ended up being an ABC. When you get an ABC type of correction and a movement to the downside, you will tend to make lower lows. So what I'm anticipating now, let me just zoom in over here, and then we're going to get very, very specific and pretty precise. And then we want to be aware of a couple of things as well. So firstly, I am anticipating that the price is going to go below this point. Let's just see, what's the price here? The closing low is the $35,000 mark. But what we want to pay attention to, what we said in the last video, is this sequence here: a wave 1, a wave 2, what looks like a wave 3. We should anticipate a rally, but more of a wave 4 rally, not a continuation to the upside. And markets move in 5s and 3s, so we're anticipating a 1, 2, 3, 4, and then a wave 5. Really, really important. Now, I just want to do a quick recap on Elliott Waves. I've got a course. It goes into great detail on Elliott Waves, but we want to just go into the real basics, the wave count basics. And I want to just show you this visual, just in case you're not used to Elliott Waves. This is it. Markets moves in 5s and 3s on the upside, but also on the downside. So we're going to flip this model upside down, and we're looking at a 5-wave sequence to the downside. And after a 5-wave sequence, we should get a minimum of either a whole big trend reversal or a minimum of an ABC correction. And by the way, if you want to learn more about Elliott Wave and Fibonacci, I've got a masterclass. We got a massive discount on our course right now. It's normally $997. Right now, it's £97. But the free is free. Elliott Wave Fibonacci is in the link below. It covers this in high level, because we're going to use some of this information now. Because if this ends up being the wave 4, I like to put a question mark here, right? I'll show you why. Right, so wave 4 is not confirmed yet. What will confirm the wave 4 is in the typical price range. I've taken the price data from the candles. If you go candles, you'll see that there was this massive wick, this price movement to the downside over here. So we're taking that into account. The wave 2 was 2 days up, and here wave 4, 1, 2, 2, 3 days up. What we want to also take into account is the momentum is looking very overbought, and the blue line is about to go below the red line, so we should anticipate sideways to down. So then we've got pattern, price, and momentum saying, look, we should anticipate a sideways to down movement for the next few days, and we'll more than likely exceed this low over here. Let's go back to closing data. It's just cleaner to look at. We're more than likely going to see the price go below here, and then probably below here and into this range that we projected into in advance. So what we're going to do today is we're going to do a couple of ratios. So I'm going to just get rid of these ratios over here. If this ends up being the wave 4 high, it might go a bit higher, but let's just say this was the wave 4 high. What would be the anticipated wave 5 zone, the wave 5 zone of this sequence? So let me just draw these lines here so we're on the same page of this sequence here. That's what we're going to look at. So we're going to do a couple of things. There's two simple ones that we're going to do. I'm going to go back into the course. We're going to go into what I call the intermediate level with Fibonacci. The intermediate level is going to be the external retracements of a wave, one end of wave 5. So end of wave 5, external retracement. Very, very important, very powerful. There's more of a confirming indicator, confirming ratio, but it gives us
If
a
wave
nice
5 tends to
ballpark
go
number
above this
that
point,
most
it
corrections
would
after
normally,
wave 4, the numbers that we want to really pay attention to for an external retracement, most people don't know about external retracements, are these two here, this one and this one. Very, very key. We've used this information in the past, and it's very, very powerful,
overextend, but
just to
this is
see
normally due to panic
where
buying
is a
in the
typical, from a psychological mood, buying and selling mass herd psychology behavior, a typical end of wave 5. So again, I'm going to move these back to this. So we're going to use the, let me get rid of these lines as well. I'm going to get rid of these lines just to clean up the chart. Well, I've got this line here that will invalidate the count, but it's not relevant right now. We're just going to do it. We're going to use the retracement, fib retracement, but we're going to take this, we're calling a wave 3 low. In fact, what we're going to do though, we're going to take the candles. Because we're looking at micro data, micro count, we're going to take the extreme. We're going to take the extremes of these two because that's relevant when we're looking at the volatility. So we can take this low and this high, and we want to get those two ratios that we spoke about, 1.272 and 1.618, right? That's this ratio here. So those prices are 32,800 and 30,800. So around the 30,000 mark, right? We want to be aware of, very aware of. But that by itself is not good enough. It's not good enough. We want more information. We want more confluence of events here. Okay, what's the most powerful, most common, most useful Fibonacci ratio for an end of wave 5? Well, one of the key ones I'm going to show you here is going to go to the advanced section of this course. It's the end of wave 5, lesson 17, fib price extension. There's key ratios.
so
The
I'm doing
two
my
that
best
I really want to focus on is a 62% to the 100% of wave 1 to 3. Like, okay, what? I covered this, by the way, in the free Elliott Wave and Fibonacci masterclass. If you take the masterclass and you buy my course, you get an invite to my private Telegram. We do weekend workshops. We do a lot of value. The community is phenomenal, and we want to really sharpen our axe during this bearish time because we are anticipating a trend reversal, and often there's the most amount of fear and sell-off before a trend reversal, and that's all hanging together with what's happening in the world right now. So we're going to measure wave 1 to 3. We're going to measure that. We're literally going to do it live, and we're going to project it from wave 4, and we're going to get some ratios up here. And that's the ratios, and the key ratios that we're going to be focused on is actually this one here, where we are going for this one here, 62% and the 100%. That's what we're going for. Yeah, and then if we get a cluster with the external retracements, then that's valuable information to us. So what we're going to do, we're going to do this here. Again, we're going to take the extremes on this one. So we're going to use what's called the trend-based fib extension. We're going to take this high over here. I'm going to do it to the side though. I'm going to do it to the side so it's clear. I'm going to take this high, just so you're clear. This is what I'm going to do. I'm going to literally I'm going to click here. I'm going to measure this to here. And then I'm going to do a third click at the peak of this, what we're calling a potential wave 4 high. And then that's going to give us some ratios down here. So we're now taking the extreme of this wave 4 high as the high. So again, I'm just going to do it to the side. So I'm going to make sure I get as close as I can. 1, and then we take the extreme. 2, and then we're going to move it forward from this high over here. All right, and the key, there's 3 ratios. There's 38, 62, and the 100%, right? So now we've got 2 clusters. This one's way too low over here. So we've got 2 clusters now. So you got, now I like to do it like this. We got this zone over here. Very, very narrow, but we'll keep it like this. And then we have this zone over here, which is a bit wider, right? So now what we're looking at, and this is how I like to do it, just to keep it very objective, as objective as we can, but we're looking at more of the macro picture over here. Again, it's not, I want to just clean it up over here. So we got 2 zones. One is below this wave A and one is above this wave A. So we've got the range of around the 33, 32,000 mark, and then the extreme of the 29,000 mark. Now, these are the 2 ranges that we want to be very aware of. Now, it's not going to be comfortable for the market if it does unfold this way. You know how Bitcoin is like the big brother. Is the, it indicates what everyone else is feeling, and then the lower caps tend to be a bit more exaggerated in its feeling as well. So this video is really about anticipate this as a high probability, minimum probabilities, never certainties. But it might, if it goes past this, this will be the typical maximum that it goes to. There's some other numbers that we should actually do. One of the key ones is going to be this intermediate count of the external retracement. And you can see it clusters over these zones over as well. So it marries up with what we're talking about. So we got more confluence of events, this zone and this zone over here. So 29,000 is the extreme and 32,000. And it all hangs together. Now, how it's going to play out, we're not sure. We can never tell. We only can go with the probabilities. This wave A, ABC of a B, and it looks like a pretty clean wave C. This I anticipate as potential trend reversal. It was a nice movement to the upside. But again, the market has spoken. The psychology, the mood of the market, the sentiment is down. So we need to pay attention to that. And normally it's in a 5-wave sequence. So we should anticipate one last leg down. And then we may anticipate and get a trend reversal. So yeah, that's it really. That's it. We've got the momentum. Let's just look at both of them. Just want to look at both of them very quickly. Yeah, the 13 is bullish and the 8. So yeah, I reckon just pay attention to the immediate trend over here. The 8 stochastics RSI. Basically, it will more than likely coincide that when this goes sideways to down, the blue line below the red, and then the next reversal will more than likely coincide with the price being in this range. It doesn't look like much, but again, because these are lows, these extreme lows over here, that will tend to panic the market. So we need to be aware of that, prepare yourselves for that. If it does occur this way, then if not a guarantee, but it's probabilities, never certainties. But yeah, this is important day, because there's a lot of positions that are looking to make a correction. I'm just going to jump into VLX for a second. I did this video, I think it was yesterday. I just want to pop into this because it hangs together with many that are doing an ABC correction, and VLX is one of them. VLX is one of them where we're looking, where it looks like a pretty clean ABC correction. And this panic in Bitcoin will more than likely, even with VLX, cause a further panic and drive down to these ratios. But again, here we're also expecting a trend reversal. So we're expecting this with quite a few different cryptos, and we want to be aware of that. So there you have it. There you have it. Bitcoin emergency update. We should anticipate below 35,000, maybe 32, and as the extreme 29. That's probabilities, never certainties. But take my free Elliott Wave and Fibonacci Masterclass, because during this uncertain time is where you want to be sharpening your act so you can read the market like a pro, get ahead of the game so you can anticipate these movements and then prepare yourselves. Because when Bitcoin dips, low caps dip more. When Bitcoin has optimism, low caps just fly, just really, really fly. And we want to prepare ourselves for that. Let's finish on a quote. The quote of the day is Confucius. It does not matter how slowly you go as long as you do not stop. We're on a $1 trillion trend, $1 trillion blockchain cryptocurrency trend, 20-year trend, and we're very, very early, very, very early. And what I find the most challenging thing that people are going through is that it's too focused on the short term, very focused on the short term. I'm talking weeks and months, and literally valuing a project based on its local recent price action, not taking into consideration the whole market has been going for a massive correction, and then the project is being evaluated by the price. And I can understand that, because we obviously want the price to go up, right? The price to go up, that's what we want. But when and if and when Bitcoin does do a reversal, if it does as anticipated, and there's all this optimism coming into the market, then there's a whole different ballgame. That's when the true evaluation should be done. But then it's going to get overvaluated, because when a price goes through the roof, it's not a true reflection. It's just speculation and things along those lines, supply and demand. And we need to be aware of that as well. So just be careful of the low caps. There's going to be, below 50 million market cap, below 100 million market cap, and even lower. Again, if Bitcoin dips, these dip extremely. And if Bitcoin does a reversal and just starts a nice movement to the upside trajectory, then all of a sudden these low caps just start to fly. But again, that's the risk reward that you need to take into account when you're looking at these projects. So just just be mindful, risk management, but it looks like high probability that we're going to get a lower low. If we were trading Bitcoin, we'll be looking to short it right now for this wave 5 because the momentum is down, or it's looking like a bearish reversal is going to occur. But look like a wave 4 pattern is occurring, Fibonacci ratios for that wave 4 pattern, and we've got that extended wave 3 to the downside. We're talking about the last 7 days, right? We're talking about the very, very short term. But an extreme movement to the downside is required to finish off a correction. Big negative news, fear, uncertainty, and doubt is often the most extreme at the end of a correction before a trend reversal. Is that going to occur? We don't know. There's no guarantees in this game. So just make sure you're prepared. Strap yourself in, because if it does make, below 35,000, then it's not going to be a comfortable time. And it's not been comfortable the last few months, right? When you're looking at your portfolio, especially with low caps. But again, zoom out and go, okay, have your 1 year, 5 year plan written out in play, and then you don't have to worry too much about this short-term market volatility, even though it may not be comfortable. All right, like, subscribe, hit the bell notification, take the free Elevate Fibonacci Masterclass. Join me in my private groups, because this is the time when you want to be upskilling yourself and be surrounded by people that are understanding what's happening as well. The community is phenomenal, but we're looking to really do stuff, really building up towards the 2024, 2025 bull run, and even the 2030, 2031, because it normally correlates with the Bitcoin halving events. And the next one is 2024 March, I believe it is, give or take, is every 210,000 blocks. And then the Bitcoin halving event happens, and then the bull run tends to be around a year. It's a dynamic market, so it's not just like a static fixed date market, but we need to be aware of these dynamics of the psychological mood of buying and selling behavior based on the emotions of fear and greed. All right, my friends, I will see you very, very soon.